Thank you, Dr. Cantu. And again, I want to reiterate my thanks to especially Steve Pice for championing this effort, and TJ Ferrer and his staff for helping with the logistics, and Dr. Cantu for, of course, making such a inclusive opportunity, and for hopefully I won't stumble too much so that the recording will actually be useful for people in the future to watch it. Again, my name is Wendy Tobin. I work at the district office in the HR administration area in the benefits department. And my area of work is all about retirement. So in my prior life, I actually worked for the Arizona State Retirement System. So that really helped me when I came to Maricopa to only have to learn Maricopa, which is itself a pretty big undertaking, right? So now I've been here about 5.5 years, and hopefully this is the beginning of more educational sessions, opportunities for everybody to learn more about your retirement benefits, your options, and what everything means, because it can be really complicated, and everybody has different levels of understanding, and this is really important information for all of us because heck, retirement's a big deal. It's a big transition, and I want to make sure, my goal is to make sure that we take steps to demystify all of that retirement stuff so that you can actually be in control of your information and your decisions for your benefit. Okay. If I pause a little bit, bear with me. I didn't have quite enough time as I would like to run through speaking these slides, and so I might be glancing down at my notes quite a bit. So I apologize for that. I'll do the best that I can. Okay. So today we're going to cover a brief overview of the ASRS. Let's see. I can figure out how to. There we go. We're going to go over a brief overview of the ASRS, benefits of being an ASRS member, but really what we're going to focus on today is retirement. So we'll talk about how your pension is calculated, how you become eligible to retire, what kind of annuity options are available. And then we're going to look at the My ASRS Excel, and specifically looking at how to use that retirement benefit estimator tool. So being an ASRS member comes with many benefits. Of course, the chief one is the pension or retirement benefit. There are also other benefits like group retiree medical and dental insurance, a health insurance premium benefit for retirees, long-term disability, and survivor benefits. And specifically LTD and survivor benefits, those are in reference to people who have not retired yet, which is us. But the others are for retirees. So when we're eligible to be an ASRS, we're required to participate in it. And this means that every time you have a paycheck, you're going to have deductions from your wages that are for ASRS, and these are known as ASRS contributions. ASRS contributions are calculated by taking a percentage of your compensation. Generally, this means wages. It's money that you receive for doing your job. So it does include, of course, your normal base pay, but it also includes things like overtime, shift differential allowances, things like that. And paid leave, if you're taking a sick day or a vacation day and you receive pay for that, that does count towards ASRS. So the percentage that's applied to your wages or your compensation on the paycheck, that is called the contribution rate. And everybody has the same contribution rate. So regardless of whether my paycheck is $800 or $8,000, the percentage of ASRS contributions is going to be the same. And that contribution rate varies year to year, but it never is going to have steep increases or decreases year to year. We are about to enter a new fiscal year in July, and we're going to see a slight reduction in our contribution rate for next fiscal year. So that's great news. But these are set usually in October, November timeframe by the ASRS Board of Trustees. Now, every time that you pay contributions to ASRS with your paycheck, Maricopa has to pay an equal amount to the ASRS as employer contributions. So your contributions are matched 100% on every paycheck. But when it comes to the amount of contributions in your account, it doesn't really matter when we're talking about retiring. And that's because your pension is actually calculated based on a formula, which we'll go through, instead of the balance of your account. So when we look at our pay stub, we can see in the middle that ASRS deduction from our pay in the before tax deductions section on the left, and the employer matching contribution in the employer paid benefits on the right. You can see here in this example, before tax deduction is 186.57, and the employer match over on the right is also 186.57. So let's talk about how your pension is calculated. There is a simple formula. And this basic formula is for the straight life annuity option. We are going to talk about the different annuity options in a little bit. But this basic formula, we'll go through the pieces of it. Now, if you retire early, or if you choose an annuity option that's different from the straight life annuity, your pension will be reduced from what that straight life annuity amount would be. But how much it will be reduced can vary widely from just a little bit to quite a lot. So let's break down these pieces of the formula. The first piece of the formula is service credit. So what is service credit? Well, every month that ASRS contributions are deducted from your paycheck, you earn 1 month of service credit. Now, before the ASRS existed, Arizona had a teacher's pension for any teacher in the state. And I believe it was $50 a month, regardless of how long you worked. In 1943, the state created the teacher's retirement system, and that replaced that state pension that they had. But 10 years after that was when the ASRS was established in 1953. Then 2 years later, in 1955, they sort of dissolved that teacher's retirement system. Anyone who was still teaching and hadn't retired from that system yet was transferred into the ASRS. Now, when the ASRS was created, it's for, it's Arizona state retirement system. It was, employees of the political subdivisions of the state. So that, of course, includes state employees, but it also includes, cities, counties, special districts, all kinds of things. There's about 700 different employers in the ASRS right now. So when we started having teachers in the ASRS, and back in 1955, I'm sure there were no summer contracts and things like that. So teachers had a 9-month service year, and that was it. They did not work during those 3 months of summertime. And so the ASRS being, not education or teacher-based, they didn't want to penalize those teachers for only having a 9-month service year by having a reduced pension. So to fix that, to accommodate that, they made this change so that all employees of a school employer of the ASRS earn service credit on a 9-month year basis. So that means when you have a paycheck in a new month and you have ASRS contributions deducted to go to ASRS, now you've got 1 month of service credit for that fiscal year. And for us, that's 0.111 year. So staff, faculty, doesn't matter. We all accrue this service credit on a 9-month service year. Now, those other non-school employer folks, the state employees and cities and towns and counties and all that stuff, they earn 1/12 of a year with each month. So they only earn 0.083 service credit each month. So even though we earn service credit faster because we were first school, no one can earn more than 1 year of service credit per fiscal year. So the fiscal year goes from July 1st to June 30th. And to illustrate how this works, we have to split that normal calendar year, and we start with the second half. So with our first paycheck for work performed in July, we earn 0.11 year of service credit. So now by the time we get to March, if we've been working all year, we've earned a full year of service credit by March. But we still have 3 months to go before the end of the service year, the fiscal year, right? So we still have to pay those ASRS contributions, which are deducted from our pay. And although we might wish we didn't have to pay contributions for April, May, and June because we're not earning any additional service credit for them, actually this is beneficial for us. And that's because we want our pension to be calculated based on our whole earnings, not just 9 months, 3/4 of our earnings, because that means that our pension will be higher than it would if it was only 3/4 of our earnings included. All right, so the second piece of the formula, we got service credit. Now let's look at average monthly compensation. So when the ASRS is calculating their pension, they're looking for your average monthly compensation. That means they're going to look at the last roughly 10 years, 120 months of your wages up to retirement. And during that range, they're going to find the highest average consecutive months. It'll be 36 if you started participating in the ASRS before July 2011. But if you started in the ASRS on or after July 1st, 2011, it's going to look at the highest consecutive 60 months, 5 years. That average is the number that they will use in your pension as average monthly compensation. Now, the third and final piece of the basic formula is the graded multiplier. And this is basically a percentage, and it steps up. If you have at least 20 years of service, if you've got less than 20, it'll just be the 2.1%. Steps up when you hit 20, 25, and 30 years. So that maximum multiplier that you can have is if you have 30 or more years of service credit, that's 2.3%. So it's just a number that is plugged into the formula. Okay, so we've covered how we get the pieces of our pension formula. So now let's talk about what it means to be eligible to retire. So there are 2 categories of retirement eligibility for ASRS, early and normal. You're eligible to retire early if you are at least age 50 and have at least 5 years of ASRS service credit. Once you're eligible for early retirement, will still be early until you reach your first definition of normal retirement. So if you retire early before reaching normal, your pension will be reduced. But the amount of that reduction is going to depend on your situation. Generally, the reduction is smaller as you get closer to your first definition of normal retirement. Now, if you retire early, there are no COLAs, cost of living adjustments, benefit increases. None of that happens in ASRS when you retire. So once you retire, if you retired early and your pension is reduced, it will always be that same amount, that same reduced number. It's not going to increase when you reach, age 65 or anything like that. It will stay reduced. So that's something to keep in mind when you're trying to determine when you want to retire, if you want to do it earlier, if you want to wait. So how do you reach normal retirement? Well, this can happen in multiple different ways. But again, you only need to reach your first definition of normal retirement, and then you are at normal retirement, even if you never reach any of the other definitions. So for everyone, there are 2 ways to reach normal retirement. Those are age 65 with any amount of service credit and age 62 with at least 10 years of service credit. And then there's a third way to reach normal retirement for those who were members in the ASRS prior to July 2011. And that's, you probably heard this term, 80 points. 80 points means you add your age and the amount of service credit you have together. And if that total is 80 or higher, you've got your 80 points. You don't need to reach any more than 80, right? So for example, let's say I'm 58 years old and I have 27 years of service credit. 58 plus 27 is 85. That's 80 or more. So I've got 80 points. Now, if I didn't join the ASRS until on or after July 1st, 2011, those age 65 and age 62 with 10 years, those still apply, but 80 points is not relevant for me. Instead, I have two additional ways that I can reach normal retirement. And that's age 60 with at least 25 years of service credit and age 55 with at least 30 years of service credit. Now, these are fixed numbers, not like the points situation. So you can't add 60 and 25 or 59 and 26. You can't add anything and hit those. So with that previous example where I said I was 58 and I had 27 years, that is, I've got age 55, but I don't have 30 years. And I'm not age 60, but I got more than 25. So in that scenario, I'd have to wait until I'm 60 to reach normal retirement, unless there was some way I reached 30 years of service before I hit age 60. But if I'm just working and earning service credit, that's not going to happen. So again, once you've got your normal retirement, you are at normal retirement. Now, when you retire, you have to select what they call an annuity option. There are 7 of them with the ASRS. And these options, the different options that they have, they basically offer you the opportunity to leave something behind for your survivor, your beneficiary, when you pass away, and what kind of amount they would receive. The annuity option you choose, and in some cases, the age and the gender of your beneficiary, those can all affect whether your monthly payment will be reduced and by what amount it will be reduced. So I'm going to look at straight life annuity first. So this is, again, the basic formula creates this result for straight life annuity. That means it's not going to be reduced. This is the highest that your pension can be each month. And the reason why it's higher is because it does not guarantee that there will be something for a survivor. Now, there could potentially be something left for a survivor if you choose the straight life annuity. And that is going to happen if you pass away very early in retirement within the first few years. The reason why is the way the straight life annuity works is you are guaranteed this is the amount you're going to get for the rest of your life. When you retire, at that time of retirement, your account exists with a contribution account balance, right? There's all the money that was paid in and interest that's all sitting there in this account balance. So the way the ASRS accounts for whether there's a survivor benefit with a straight life annuity is when you pass away, they're going to add up the total amount you received in pension, all those monthly payments added together. And then they compare that to what that account balance was at the time that you retired. Now, most retirees of the ASRS, they're going to exceed what was on that account balance in what they receive in pension payments within probably 5 to 7 years after retirement. So that doesn't mean that you don't get any more pension. You still get your pension guaranteed for the rest of your life. But if you pass away, let's say 10 years into retirement with the straight life annuity, chances are there wouldn't be anything left to leave to a survivor. So that's something to be considering when you're choosing your annuity option. Now, Arizona has a spousal consent law. And this means if you are married when you retire, you have to select an annuity option that provides at least 50% to your spouse as a primary beneficiary for retirement. This basically means you'd have to have one of the joint survivor options that we'll talk about next. But there is a waiver. So if the spouse does not need you to select, they can actually waive that so that you can choose the straight life annuity option. And if that's something that you want to do, you would receive that paperwork through the ASRS. That waiver form is something that the ASRS provides to you. Now, if you're not married when you retire, it doesn't matter. You're not required to leave anything for anybody. You can choose straight life annuity if you like, or any other one. You don't have to have anyone's consent. Okay, so the joint and survivor options, aside from the straight life annuity, these are the most popular annuity options that people choose. And this option, either any of the 3 of these, guarantees something for your beneficiary after you pass away, and it guarantees it for the rest of their life. So this is how it works. when you've chosen a joint survivor option, you will, after they calculate it, you'll receive whatever your pension amount is for the rest of your life. And then if you pass away and your beneficiary is still living, then they will receive a percentage of what your pension was for the rest of their life. And the percentage that they receive is based on one of these three levels that you've chosen: 50%, 66 and 2/3%, or 100%. For example, if you retire with a joint survivor 50% option, let's say that your pension amount calculates to $1,000 a month for the sake of easy rounded numbers. I don't do math on the fly. If I've got $1,000 a month, I've chosen a joint survivor 50%, I'll receive $1,000 a month for the rest of my life. When I pass away, my survivor will receive 50%, $500 for the rest of their life. Right? That's 50% of 1,000 is 500. I can't do that. Likewise, if you chose joint survivor 100%, and it happens that your monthly pension is $1,000 a month, you receive that each month for the rest of your life. And then your survivor receives $1,000 a month for the rest of their life. So again, because Arizona is a spousal consent, has a spousal consent law, you do need to choose one of these joint survivor options unless your spouse consents to waive it through that spousal consent waiver. Now, the other three annuity options are called term certain. And honestly, these are kind of difficult to understand. And they are the least popular annuity options. So they're really only going to provide something beneficial in kind of a narrow set of circumstances. Like if you have a situation where you need your survivor, your beneficiary, to receive something until your mortgage is paid off, and your mortgage is scheduled to be paid off in 5 years. Then if you chose that term certain 5-year, that would guarantee that something would be paid, whether to you or to your beneficiary, for at least 5 years. And the way that that works is you select a term, 5-year, 10-year, or 15-year. Your pension is reduced during the term, so you're receiving your pension at that lower amount. Then if you live past the end of the term, your pension is going to bump up to what the straight life annuity would have been. But if you pass away after that, there will be nothing left for a survivor. If you pass away during the term, then the remaining payments in the term will be paid to your survivor. So that's how that option works. Okay, so we talked about how your pension is calculated, how different factors can affect your monthly pension payments. But it's not easy to calculate all this on our own, even though we have the formula, right? This is why it's really helpful to use the benefit estimator tool on your My ASRS account. And I don't know if all of you have gotten your account registered. If you haven't, I did include in the handout those instructions for submitting your registration. And that's something that I will go in and verify for you. So then after that happens, you'll have full access to your account. But during the initial setup, you might have limited availability to the functions in your account. So just be patient. That doesn't take that long to get fully registered. So in addition to your benefit estimator tool, which we're going to look at, it's really important that you have your My ASRS account registered. It makes it really simple when you want to update or designate new beneficiaries. Before retirement, you can have multiple primary and secondary beneficiaries. So you always want to make sure that you've got your beneficiary designations set up, before retirement, because if you were to pass away before you retire, all of that money that you've paid in, all of the 100% matching employer contributions plus 7% interest, that all lump is going to go to your survivors or survivors, depending on how you've got your designations set up. But at retirement, you only get to pick one person, right? Okay. It also makes it easy to update your contact information. So that's really important if you move or change your phone number, change your email address. Pro tip, don't use your work email address in your My ASRS account, because if you leave Maricopa and then you lose access to that email address. It makes it a little bit harder to get an email with the unlock code and things like that. So make sure you have a personal email address on here. Okay. So when you actually get ready to retire, you're actually going to use your My ASRS account to apply for retirement as well. But when we look at the estimator, what we're going to look at first, it's going to show you a table with different numbers in it. We're going to look at those. But it's going to be different for each of us. Now, if you're not yet at early retirement, it's probably going to show you a column for your first early retirement eligibility, your first normal retirement eligibility. It's probably going to have maybe an age 65 column. And it's going to probably have next rated multiplier, like once you hit normal retirement, what's the next rated multiplier after that? And it's also going to have a column that has, it's blank, and you get to put a date in there and then see how it fills it out. So this is an example when you log in, you can see this left side menu, got your benefit estimates section. And that first one is for retirement. And then when you're ready to apply, you can see the next section down is the apply now section. And that has retirement, refund if you've left Maricopa and not working for any ASRS employer and you want to forfeit your future benefits. That's how you would do that. Or if you want to look at service purchase, if you've got, that's not something we'll talk about today, but that whole section is for there. Okay, so when you get to, you click on your benefit estimates, retirement, here's an example of what that might look like. Let's see if I can move this. Okay. So you're going to see the same rows for each column. So we're going to talk through these rows first. And also, all of these estimates are always going to assume that you will continue working and earning service credit until you retire on whatever that date is. So if you stop working and you don't retire for another few years and you want to be playing with the estimates, you want to make sure that you're updating that so it's not artificially inflating the number for you. Right. Yes. So if you, let's say you stop working, but you're not ready to retire from ASRS yet, so you're not earning service credit right now. You have what you have. But let's say you want to see like, okay, I was close but not quite eligible to be at normal retirement. I want to see, you know, how long would it take? What if I retire on this date? Make sure that you're updating the amount of service credit, because if it's assuming that you're continuing to add service credit. Does that make sense? Okay. All right, so that first row is showing the retirement date for that estimate. The date is going to be displayed based on whatever that milestone is. So in this example, normal retirement is the first column. Okay, the next row is what would this person's age be at that retirement date? Then underneath that, how much service credit would they have on that retirement date? Again, assuming that they continued earning until that time. You know, on this estimator, it does list points, age plus service, because 80 points is one way that this person could reach normal retirement. By the way, this is completely made up data. It's not anyone's actual account. This is because this person, this example, was already a member before July 1, 2011. So remember, if you started ASRS after that date, then 80 points is irrelevant. You may not even have that row. All right, the next row shows what graded multiplier would apply at each one of those milestones based on the service credit. And then after that, it shows the estimate of the average monthly compensation we talked about. Also note that the ASRS is not going to project any future increases to our pay. So if you are, you know, looking at an estimate for, you know, 10 years in the future, 20 years in the future, chances are that your average monthly compensation is going to be like way lower than it probably will be. If you continue, you're probably going to see your compensation increase over time. So the further away you are from retirement, the more low that average monthly compensation number is going to be. So you can adjust that, and I'll show you how in just a moment. All right, the next, sometimes I talk to folks and they get confused about average monthly compensation and monthly benefit and annual benefit. So monthly benefit is the retirement amount, the pension amount that you would receive each month. That's what that row means, monthly benefit. And again, that's with the straight life annuity option. And the last line, annual benefit, that's basically taking the monthly benefit times 12. This is the annual amount of your pension that you would get in the estimate there. Also, I want to point out that the ASRS always gives you estimates that are gross numbers. They don't, even though they will withhold, taxes from your pension when you're receiving your pension, they don't project any of that here. These are always gross numbers. Okay. So let's look at the first column. It shows the sample person's first normal retirement date. And at that time, they'll be about 57 and a half and have 22.46 years of service. So they're a member before July 2011. This is when they have 80 points, and that's why this is their first normal retirement date. Okay. At that time, they'll have 20 plus years of service, but less than 25, and that's why their graded multiplier is 2.15. And this estimate is calculated based on an average monthly compensation of $3,620. So with all of these factors, their estimated straight life annuity would be about $1,748 per month. That would be about $20,977 per year. Now, if we look at the early retirement column in this example, I should have done that. Now you can see it on the screen. Okay. If we look at the early retirement column in this example, you can see that this is showing how early retirement drastically reduces the pension amount in this situation. So this person could retire early when they turn 50. And at that time, they would have 15 years of service credit. That's less than 20, so their multiplier is only 2.1. And then if we do the math using that pension formula, we multiply 15 years of service credit by the $3,620 average monthly compensation and multiply that by the rated multiplier of 2.1%. The result is actually 1,142, around that. But this column says that the monthly benefit will only be 502. And that is the impact of retiring early and not waiting for normal retirement. This addendum B, this is something that I took out of the back of the ASRS Road to Retirement Guidebook. If you wanted to look at these charts, there's one for before July 2011 and for on and after 2011, because those definition of normal retirement is a little bit different. So this one is for those that are members before July 2011. And when we look at the age and years of service, we find the column for age 50, 15 years, age 50, we see 44%. So we take that number that we got by multiplying the service credit average monthly compensation and the graded multiplier, that 1142. When we multiply that by 44%, which is this early retirement decrement here, that shows you how this estimator is coming up with only $502. So not that this is going to apply in every situation for everyone, hopefully most of us will not need to retire early and we can not have to have it reduced for being early. But I wanted to show you how these numbers are calculated so that you have that awareness for yourself. Okay. Now let's look at the estimate for the next multiplier. This is showing the date when this member would reach the next highest multiplier after the multiplier they had at first normal retirement. So at normal retirement, it shows they had a 2.15. So what's the next one? It's 2.2, and that's what this column is for. So let's say this is our estimate, and we wanted to see how it would be different if we changed something. Or we want to see what it would be for different annuity options. Because again, this is only showing you their life annuity information. Okay, so to do this, we click on the More Options button at the bottom of the column, and you can see that all of the columns have that button, so you can choose whichever one you want. And let's say you want to look at changes to something that is, one of these other columns, like it's closer to when you're going to retire, so you just pick that one. That's always an option. So when you click on More Options, you're going to see this other screen with these tabs, and that first one is going to show you the factors that it's using that you can change for your pension calculation. So here you can use this to change the date of birth like I did for this example so that you can, but obviously you're not going to actually change your date of birth. This is just for the purposes of the estimate. And then you can change the retirement date that you're going to use. If you do change the retirement date, make sure that you're updating the amount of service credit that you would have at that time, because that's the next field there. And then the last one is your average monthly compensation at retirement. So again, ASRS isn't going to project that we're going to get raises or cost of living adjustments or pay progression or any of that stuff. So this is where you can actually say, I think, my annual salary is going to be, let's say, this amount. And what's that divided by 12 months? Put that in as the average monthly compensation in retirement, just for the purposes of estimating. So that's a good way to do that. Now on the second tab, we can show the different annuity options other than the straight life annuity. So straight life annuity is automatically checked. If you want to, you can look at the term certain options. But I want to look at the joint and survivor options. Now, because it is going to rely on one survivor, and the 66 2/3 and 100% joint survivor options, they do have some restrictions on the age if it is not your spouse. And that is why it shows you the date of birth field and asks you whether or not it's your spouse. Because if I said, my daughter, who is, more than 24 years younger than me, I can't pick her as, my 100% joint survivor. I could pick her as my 50% joint survivor. So if you have like one, because again, you can't choose multiple people, but if you have one person you want to put in there and they're not your spouse, you're going to be restricted on the options if they're much younger than you are. Because again, the ASRS benefit that's going to be paid is for the rest of their life. So if I'm choosing my grandchild and they're 2 years old, that's a lot of money the ASRS is going to be paying out.
What if your spouse is 20 years younger than you?
If it's your spouse, there is no restriction.
Okay.
Yeah.
That makes no sense.
And you can see also that there's a checkbox at the very bottom. If you click that, it just picks everything for you. But let's just look at these estimates and see what they look like. Okay, the next tab over is for partial lump sum. And what the partial lump sum is basically an advance on your pension. And what it does is you take up to 36 increments. So it's basically 1 month up to 36 months of your straight life annuity calculation and receive that in a lump sum in advance. If you do that, it will permanently reduce your pension amount. So that's something to keep in mind. Yeah. I'm not going to do this one for this estimate, but that's where you can find it if you want to see what it would look like. The last one is health insurance premium benefit. ASRS retirees, they are eligible to enroll in ASRS retiree group coverage for medical and dental. Also, if you retire from Maricopa and you enroll in COBRA coverage, that continues your Maricopa benefits for up to 18 months. That, for this purpose, is considered a group retiree insurance plan provided by the employer that is not subsidized. And therefore, it's treated the same way as the ASRS group retiree plans for purposes of health insurance premium benefit. The health insurance premium benefit, if you have at least 5 years of service credit when you retire from ASRS and you are in one of these eligible coverages like the ASRS medical or dental or COBRA medical or dental from Maricopa, then you can receive a small amount each month to help offset your out-of-pocket monthly premiums for the health insurance. So that is something that is not going to reduce your pension amount. It is available to all retirees who have at least 5 years of service credit at retirement. So if you wanted to see like what that would look like, you can include that. Now that second row there that says include optional premium benefit estimate, I'm going to say no to that because that is different than the health insurance premium benefit. That is something that says I want to guarantee that my survivor receives some of that premium benefit if I pass away and they can continue the coverage. So that will actually reduce your premium benefit. And then, you know, the survivor would receive a portion of the premium benefit. So that's kind of like probably not super common. So I'm not, just for sake of clarity, I'm not going to elect that on this.
Wendy, really
Yes.
quick, we do have a question in the chat. If your spouse waives the benefit, you can leave the benefit to one of your children if they are more than 30 years younger than you? That's the question. So I'll read it again. If your spouse waives the benefit, you can waive the benefit to one of your children if they are more than 30 years younger than you, question mark?
They can, and I think it's actually more than 24 years younger. So yeah, you could actually leave it to a grandchild. You would just be restricted on which level of joint survivor option you can pick. You can't pick 100% and you can't pick 66 and 2/3 in that example, but you could choose the 50%.
Thank
Okay. Okay, so I'm going to put here no on that optional premium benefit, but yes on the health insurance premium benefit estimate, just so it shows me what that looks like. And I'm going to put in my spouse date of birth. And that last button says, will you be enrolled in Medicare Parts A and B at the time of your retirement? I'm saying no, because neither of us would be 65 or older based on this date and this estimate and this age of that person and this member. Okay. So that first, we've gone through all the tabs and then it spits out your new estimate, right? It's not going to show that annual amount that it did on the initial table screen that we first saw, but it is going to have all the other things. But first, it's going to have this general information so you can see, okay, I'm saying this is for this retirement date. I'll be this age. I'll have this much service. This will be my average monthly salary. And that's the graded multiplier that will be there. And then after that, let's look at first at the straight life annuity. So it's going to show a monthly amount of $19.91. And then that's the monthly benefit, right? That's the pension amount. Everything underneath that is the health insurance premium benefit information. So what that is saying is this person enrolls in an ASRS medical or dental, or retires and chooses COBRA for Maricopa for medical or dental, or any combination of any of that for themselves and their spouse. So it could be, you know, myself, COBRA for medical, and myself and my spouse for ASRS dental, and that counts as family coverage because there's at least one program that I'm covering myself plus at least one. So in that instance, I would get $260 a month for the premium benefit. This is completely, again, outside of the calculation for your pension. It doesn't have anything to do with it. That is a table based on how much service credit I had, which is 10 plus years, and the fact that I'm under 65, and so is my spouse, and we've got spousal coverage here.
Wendy, we have a couple more questions in the chat.
Okay.
So there's two parts to it. One, the plan is to retire at 65 and started in August 2013. Not sure if that would meet the normal retirement age. So I guess, does that meet the retirement age of started in August 2013 and plan to retire at 65?
Yes, because age 65 with any amount of service credit is one way to reach normal retirement.
Okay. Then the second part is, do you get a lump sum payment for sick leave hours? This person retired from Phoenix PD. So they know that they got paid for vacation and sick leave that was left on the books, but not sure how that works with the retirement system.
So that's actually not going to be paid by ASRS. That's something that Maricopa would pay to you. So when you retire from Maricopa, if you have vacation, any unused accrued vacation leave is paid out to you at whatever your hourly rate is at that time. If you don't have vacation, or let's say you do have vacation, or whether or not you have vacation, if you have sick leave that you haven't used and you've had continuous 10 years, the last 10 years at least, that you've been employed by Maricopa, then you're eligible for a portion of that sick leave to be paid out. And that is a formula. It basically is a dollar amount and a number of days. So the dollar amount is calculated by taking whatever your daily rate of pay is, not your hourly rate of pay, but your daily rate of pay. And you cut that and take 25% of that. Whatever 25% of your daily pay is, if that amount is more than $40, then you use $40 because that's the maximum. If it's less than $40, 25% of your daily rate of pay, then you use whatever 25% of your daily pay is. And then for sick leave, you look at how many days, not hours, days of sick leave that you have. If you are staff, that means you take your total hours, divide by 8, an 8-hour day. If you're faculty, you take your total hours, divide by 6. Faculty has a 6-hour day for this purpose. And so then you figure out how many days you have, and that is capped at 200 days. So you multiply that dollar amount, $40 or whatever that 25% of your daily rate is, multiply that by how many days of unused sick leave that you have, that's capped at 200. That amount is your sick leave payout. So if you, the highest sick leave payout anyone can get at Maricopa is $8,000, and that is $40 times 200 days. And this, anytime that you have vacation payout or sick payout, that doesn't count for ASRS. So you don't have ASRS contributions deducted from that. The only time you would is if you were a member of the ASRS before January 1st, 1984. I don't know if we have any non-retired employees that are members before 1984. If we do, it's only a small handful. So, and if you are one of those people, see me when you're ready.
They shouldn't admit it publicly, right?
Unless they want to get tomatoes thrown at them.
Just wanna make sure.
Okay. Liz, were there any other questions?
Not yet. Well, I'll let you know if there are.
Okay. So before we move on from the premium benefit, I just want to also mention that this amount, you can see that single coverage down there under the family coverage, that's not bolded because that's not what I said in my estimate for options. Single is if I didn't have anyone covered by my medical and or dental, and I'm under 65, then it's $150 a month for 10 plus years of service. If I had at least 5 years, but less than 10 years of service when I retired, that there is a table for how much of the premium benefit you would get each month. So $150 if it's just myself that I'm covering. And also this money is not sent to the retiree directly. This is, otherwise that would become taxable income. They don't want that to happen. So this is applied directly to the premium. So it discounts your premium. If you've got COBRA, then it's a little bit longer of a process to get set up, but it gets set so that our COBRA administrator will discount the premium for you. Okay. Okay, let's just look, we've got straight life annuity. Let's look at the rest of the actual pension estimates. So that top one is the straight life annuity. Now with those options that I selected, we've got the 100% joint survivor option. And you can see that that's $1,864 is the monthly amount, and also would be the same for the beneficiary. So I would receive $1,864 every month for the rest of my life. when I pass away, my survivor is going to receive 1864 per month for the rest of their life. And then 66 2/3, again, that's a different number, 1904, 1905 per month. And then when I pass away, the beneficiary would receive about 2/3 of that, which is about $1270 a month. Now you can see that that straight life annuity amount, that's the highest one, 1991. After you apply the different joint survivor options, you can see that those do reduce the amount that you receive. But down at the bottom, the 50% joint survivor, it provides the lowest amount for your beneficiary, and therefore it reduces your pension the least amount.
We have one question in the chat. Is there a best day or month to retire if you plan to retire at 65?
Not necessarily, but there are different things that might come into play for your situation, like about 2/3 of the ASRS is made up of education, and that means that we are in peak retirement season right now because it's the end of the school year. So all those K through 12 teachers and all those faculty at community colleges and the universities, they are all thinking about retiring at the end of the school year. They're also thinking about retiring at the end of fall semester for not the K-12, but for the colleges and universities. So that just means, it doesn't mean that you shouldn't retire in the summer if that's when you want to retire, but it does mean that when you retire, the ASRS has a calculation period of 45 to 90 days that they take to process your pension. Most new retirees are going to receive estimate checks in the meantime to help bridge the gap, so you won't receive like nothing until 90 days later. But if you are retiring during the summer, during peak retirement season, it's likely you're gonna get, full 90 days it's gonna take for them to calculate your pension because they've got such high volume at that time. It really is gonna depend on the person and their situation.
Wonderful. And then there was that they know that you mentioned you wouldn't be covering service payback, but maybe towards the end, if you could touch on it just briefly. The person who asked says they're new to all of this, and so anything you can provide or maybe how they can get in contact to get more information would be great.
Okay. And I think we're going to do that very shortly here. Yeah. So if you haven't been on the ASRS website, then you don't know. If you have been on the ASRS website, you know that there's a lot on that website. And if you are not familiar with the stuff, it can be a little overwhelming and you're not sure where to go. So I actually just, there's so much content to navigate. I just recommend, these are 2 ways that are a good place to start. They're not the only places. But member videos is where you can find the Route 3 and Route 4 meetings. So this is what that page looks like. You can see general videos there. And they're not necessarily any order, but Route 3, destination in sight, Route 4, next exit retirement. These are for when you're getting close, within a couple of years of retirement. These are really good to watch because these are on demand. You don't have to log in to watch these. You can pause them, you can rewind or click forward or whatever. You can spend as much time as you want with the videos. And those are just recordings of previous meetings. They present the same information every time they do these. And they also do have live versions of them as webinars. Retirement Central is the other one that I mentioned, the other link there. And it is exactly what it sounds like. It's a centralized page that brings together the most frequently used pages and things that you might be looking for when you're planning to retire. Like at the top, those buttons, we've got the My ASRS login. Now you'll find lots of places all over the website that you can click on My ASRS and get to the login screen, but they have it right there too. And then that member handbook button right next to My ASRS login. That's really useful. That's the Road to Retirement guidebook that many of you have seen if you've been to the meetings before. It covers all of the basic information about ASRS and what you need to know. And that early retirement decrement page, those pages are in the back as well if you wanted to look at those. Down there on the lower left, it says download a timeline. That's a checklist for all the things that you need to think about that the ASRS recommends that you think about as you count down towards your retirement from ASRS. down there, the retirement annuity options. If you're confused about what we covered with the straight life annuity and the term certain and all that stuff, retirement annuity options has more information. And there is actually a video about the annuity options as well on the member videos page. Okay, and then on the lower right, sign up to attend a group meeting. These are where you can actually register for the Route 3 and the Route 4 live webinars. They also have both in-person and online meetings for the retiree insurance plans, Know Your Insurance. So those are really useful if you want to actually attend one of those meetings for yourself. And you can find their schedule there. Okay, and I am over time. So sorry I don't have time to talk about service purchase, but this email address, you can reach me. And then since we're past 1 o'clock, I don't want to spend any more time presenting because I want to cover as many questions as we can cover before we all need to get back.
Yeah, and the event actually goes until 1:30, so we have about 20 minutes if you have time, Wendy. But there was one other question from the virtual side. Can you explain the process of applying for retirement? What do you need? What do you need to have? How long should you expect for your retirement to be approved, et cetera?
Yes. So when you go to your My ASRS account, you go to that left side menu where it says apply now and you click on retirement. It is kind of like, I don't know, maybe I'm dating myself, but it's like a wizard. So it steps you through all the pieces so you can't mess it up. They do have a paper retirement application, but I definitely recommend the online version because you can't mess it up. You can definitely mess up your paper application. And there's like 27 steps or something, but they're just like every little detail trying to make sure everything's clear. So that's why it's so many. Now, when you start your retirement application, I think it begins with entering what retirement date you want. So you can actually submit your retirement application to ASRS up to 6 months before the retirement date that you're choosing. And the latest you can submit it is, although I don't recommend it, the day before or the day of that date, the retirement date. I definitely don't recommend waiting until then, but technically that is the latest that you can submit it. With Maricopa, you must give at least 2 weeks notice to your supervisor, whoever you're reporting to, that you're going to retire. Also, one thing to note is you don't have to start your ASRS pension when you retire from Maricopa. For example, let's say I'm faculty, so I have accountability, but at the end of accountability, I'm like real close, but not quite to age 62 with my 10 years. I've got more than 10 years, but I'm not age 62 yet. My birthday's in, July. So I don't have to start my ASRS pension on May 10th or whatever at the end of faculty accountability. I can choose, as long as my last day of employment with Maricopa is before, at least 1 day before the retirement date that I'm picking. Those are not like mandatory tied together. You must give your notice with at least 2 weeks ahead with the date. But for ASRS to start your pension, that's a separate thing. That's what this online application is. Okay, once you begin your ASRS application for retirement, you can, let's say you get to the part where you're like, oh, shoot, I don't have my checkbook near me. I don't know what my bank routing number is for my direct deposit. So I gotta go get that. You can save it and come back to it. They will keep it in whatever state you left it for up to 60 days. If you wait longer than that, they'll reset your application. So once you finish the application, you've done all of your 27 steps and you submit it, then yay, nothing's going to happen. Nothing will happen until your retirement date actually arrives. It'll just show pending and nothing's going to happen. Maricopa doesn't get notified. Nothing happens until your retirement date comes. And then their website generates an ending payroll verification. That's something that a district office payroll will see on that retirement date or the day after. And then they complete that information and provide it to the ASRS, but they won't do it until they finish processing your final paycheck. So that could be a couple weeks, right? Depending on where in the pay period that you're retiring. And Sometimes people are, you know, they see the instructions say that they have to follow up with their employer about this ending payroll verification. And that is really intended for, you know, like I said, the ASRS has about 700 different employers. And they actually have some employers that literally have a couple of employees. That's it. So those people are not dealing with retirement on a regular basis. And you might, if you're retiring from a small employer, you might want to, you know, follow up with payroll, whoever is going to complete that. But with Maricopa, we have people that retire from ASRS every pay period and almost every day. And so, so you don't need to like follow up and remind them to complete it. But if you ever have concerns about that, you can always ask me. I have the access to be able to see them. And so I can tell you if there's a status or if there's something wrong, or I can say, hey, payroll, can you take a look at this? This is, you know, something's going on. Yeah, I think I answered that question. But Liz, is there something more or did I miss something?
Not on the virtual side. Anybody in the room have any questions?
I have a question.
Yeah.
So over the years, I've heard, you know, various conversations and discussions and people advising you what to do. And on slide number 9, you talk about the average monthly compensation. And in there it talks about 36 months if you're before July 1st and 60 months if you're after July 2021. I'm gonna focus on the 36 months because that's where I would fall under. But I was told that the last 3 years before you retire is what you know, if you have a job, that pay is what they average out. But from what this sounds like, it's 10 years and the consecutive months, 36 in this case, you look for where the highest is at within that 10-year time frame. Okay.
Yes, so, and I'll reiterate some of that in case people couldn't hear it online. So the question is about this average monthly compensation. Some people have heard that it's actually your last 3 years or 36 months instead of the highest consecutive 36 months within the 10-year range or 120-month range. And yeah, it is within that range. And so if you have a situation where, let's say, you know, I'm doing this job, I'm taking on extra assignments, my pay is a little higher than before, and I'm not quite ready to retire. I'm ready to like stop doing all of this, and I want to take like a fewer hours job, maybe a part-time job that's at least eligible for ASRS. And I might do that for a year or two and then retire. And that's fine because it's only been 2 years that I've had lower wages. And that's certainly, you know, my 36 months plus those 2 years, that's 5 years. And that's certainly within 10. Or even if I was a 60-month average, that's still within 10 as well. So yeah, it's gonna depend on your specific highest.
All question to that is, in my case, I do also adjunct. And does adjunct pay correlate with that at all, or is that totally separate from it?
So if you are an employee who is also an adjunct for Maricopa, then your wages are ASRS compensation, so they will be included. You don't earn additional service credit, it's just with your service credit that you're earning. But if you are not an employee plus an adjunct, if you are adjunct only or you're part-time but not meeting eligibility, and an adjunct or maybe multiple adjuncts, you know, I've seen folks that are teaching at multiple colleges. If you're not teaching enough to reach ASRS eligibility, then even if you're, you know, full-time at, you know, Goodyear Public School District or whatever, it does not make you eligible for ASRS with the adjunct assignment if it's not meeting ASRS eligibility. So you can't include it if it doesn't meet eligibility. Yes.
You were talking about matching the employer contributions. They match 100%. Is that forever? Or like as long as you work here, or is it up to a certain amount or a certain time period?
Yes, so service credit is based on the contributions. And so those matching employer contributions, that's matching 100% what your contributions are. So if you're paying, they're paying the same amount. And those get sent together with every payroll to ASRS. If the ASRS receives yours but not the matching employer, they're going to be like, hey, Maricopa, what are you doing? Because they they can't allocate that service credit to your account if they don't receive both sides. So yeah, it's based on the contributions that are being paid. So that's what's being changed.
For the duration of my time working with the ASRS.
Yes, because it is required in law that employers match each contribution 100% with every payroll.
Thank you.
Kind of follow up on that one, because again, trying to clear up what hearsay is. When you on an ASRS and when you see the contributions and what are coming in on the contribution details. The number that says employee balance, is that just what the employee contributed, or is that also the matching? Is that also shown?
That's a great question. So before they made some plan design changes, when you would have your contributions, you would also have the matching employer contributions going into ASRS. And then if you decided to leave employment, let's say you were moving to Alaska and you only had a few years or maybe you've got, 5 years or whatever, and you want to pull all of your contributions out, you want a refund, that would forfeit rights to any future benefits, but you would receive back all that you contributed, all of your contributions, plus a small amount of interest. And yeah, back then, if you had at least 5 years of service when you're pulling your refund, you'd receive a portion of the matching employer contributions. And if you had 10 or more years when you took a refund, you would receive all of the matching employer contributions. But they made a plan design change so that now, and forgive me, I can't remember if it's 2010 or 2011, if you take a refund, even if you've got 10 or more years, if you started in ASRS after that date, you only get your contributions plus 2% interest. The match doesn't exist. And so the only, since this only applies to those particular members, the ASRS changed the way that they display your account balance. And they're only showing you your contribution amounts because they didn't want people who aren't going to get that match to have this artificial inflated understanding of what they would receive in a refund. Now there is a section on the benefit estimates section on the left side menu that's for refund. That will tell you what the refund actual estimate is. But for sake of not creating confusion, the ASRS doesn't display the employer balance, but it will be the same amount. And if you look at that, there is a little icon, little blue thing. If you hover your mouse over it, it should have that kind of an explanation about that, about the fact that the employer contributions aren't displayed, but they are there. Yeah.
The straight life annuity and the different options that you have with that, do you pick that now or when you retire?
Yes, the annuity options like the straight life annuity, that is something you choose at the time of retirement on your retirement application.
Okay.
Yeah.
Do you have specific numbers for the amount of adjunct hours that are supposed to tell in order to qualify for the ASRS contribution? This may be a account specific question, but I was in the previous capacity, I was able to contribute. And now I think enough just as a teacher, not adjunct to contribute. Do you have a specific benefit, or is there maybe because I was able to before I put in some just
So if you don't meet eligibility, you can't put into ASRS. That's where those optional retirement savings plans we have are helpful. If you want to set aside additional funds for your retirement, 403B, 457B, Roth 403B, Roth 457B. But if you are, you can email me and I can show you like how your situation is looking. But there is actually a formula for the adjunct because it's easy to like full-time employee or residential faculty. That's easy. If you're working at least, 20 weeks in the fiscal year of at least 20 hours a week, that's the ASRS eligibility. But with adjuncts, it's different. So with the ASRS, we determine a formula that HCM uses to assess whether or not an adjunct is meeting eligibility. And what it does is it's taking all of your class assignments and, we're going on fiscal year, right? So you're not likely to meet eligibility with fall semester if you're not already eligible. because you don't have more than 19 weeks, in the fall semester. So the ASRS eligibility can't really be met unless you've already got some summer weeks that were more than 20 hours a week. Then you've got also fall so together it is more than 20. So I'm sorry, I'm getting a little confusing, I'm sure. But they look at the assignment. Each assignment has the load. Multiply that by 32 clock hours per load. And then divide that by the number of weeks in the assignment. And that's how they determine hours per week for ASRS purposes. But yeah, if anybody has questions about that, you can always email me and we can go through whatever your situation is.
Yeah, Wendy, I was going to say there was a message that came in, maybe a little bit aligned to what was asked, just kind of someone who was adjunct before and then now working full-time as residential, how does that play in? And then again, there was a question again about the buyback. And so I wonder if either we can have you out for a session that's just focused on that, or, it sounds like the best strategy is for people to email you to set up a virtual meeting or something to chat more.
Yeah, that might be good. I think, let me just go to the ASRS website real quick. Can you see the ASRS website?
If you could share that tab in the Zoom, we still see the contributions to ASRS.
Okay. So right here on members, scroll down almost to the bottom of this menu, we'll see service purchase. This has a lot of information about service purchase. There are restrictions on it. This is, if you are new to the ASRS, you have to have at least 5 years in the ASRS before you can purchase any other public service that you might have from any other public employer in the US. The restrictions are all listed here. And then if you have some time that you can buy and you want to know like what kind of cost that would be, first of all, it can be very expensive. And if you wait longer, it gets more expensive. But there is a place in your My ASRS account on the left side menu. In the Apply Now section, it says Service Purchase. If you click there, you go through a couple of pieces of information, and then you put in what you've got. Then they will generate a cost letter, an invoice for you. It does not obligate you to buy anything. And also, if you wanted to buy some service, it doesn't obligate you to buy everything on there. If you say, okay, well, this is, $50,000 and I can't afford that. But I could, from a rollover from this other qualified account, I could spend $30,000. And so what will $30,000 get me? So you can actually do it that way, or you could say, I have 4 years I could purchase, but I only want to purchase 1 or 1.5, whatever. You can do it that way too. So that would be how you do it, is through your My ASRS account. And then you can see what it would cost. And if you don't want to buy anything, you don't have to. There are also, if you do buy something, there are multiple payment methods that you can use. You can do combinations of certain payment methods. So there's a lot of flexibility there, but it's very, it's individual. Yeah.
My question would be, say I retire from Maricopa, got my points, all that stuff, and then I get it from working. Like a pause from working.
Oh.
And with that, I come back to work at another ASRS contributing company, PPS, EMOVISH, or come back teaching in some capacity. Are there options for somebody in that situation to maybe waive the idea of contributing to future or getting that restarted? What are some of the options in that kind of situation?
Yes. And I'm going to show you return to work under the retirees tab here. This has a lot of information, but generally this is how it works. When you retire from ASRS, you need a termination date when you retire. There are circumstances that you could reduce your hours. You've already reached normal retirement. You could retire from ASRS without terminating employment. But if you do that, you can't ever work 2020, without having to suspend retirement, pay in again. So if you want to work in retirement without having to pay into ASRS, you want to get your pension, you can't receive your pension and pay contributions at the same time. So you need to first establish that termination date. And this is really important for everybody who has more than one job. You have to have that termination across all of the jobs. Otherwise, it's not going to count. Payroll is going to complete that in payroll verification and say, nope, they didn't have a termination. And that's going to affect your ability to work after retirement. So you establish that termination date. If you retired early, then you'll have to wait longer. But if you retired at normal retirement, basically your termination date, your last day of employment, plus 365 days. If at that time you have reached normal retirement, whether you retired early or not, at that time, if you're at normal retirement, then you can go to work for an ASRS employer, even full-time, and you don't have to suspend your pension. You can choose to, if you're returning to work and it's enough to be eligible for ASRS, you can choose to suspend your pension. The only reason you would want to do that is if you retired sooner than you intended to, and for whatever reason, and now you want to add more service credit and then re-retire later with a higher pension with higher service credit. So that can happen too. If you don't meet those criteria of having a termination date plus 365 days and being at normal retirement, if you return to work 2020, ASRS eligible, then you will have to suspend your pension and resume active contributions. Let's see. But as long as you have that termination date established, if you come back to work and, with Maricopa, the Federal Affordable Care Act says you have to have at least 26 weeks before you come back as part-time for Maricopa. So let's say you retire, you've got your termination date, you wait 6 months, you get rehired as part-time temp, adjunct, whatever it is. You can do that if you're not working at least 20 weeks of 20 or more hours a week, then you can do that and it doesn't affect your pension. You still get your pension. You're not working enough to meet ASRS eligibility, so you're not violating the return to work law. And then again, once you get to that 365 days normal retirement, then you can do whatever you want. As of right now, this is how the return to work law is set up. So.
So I know we're at 3 minutes. There was 2 things for the virtual side, so we'll ask them quickly, just to make sure. So adjunct faculty compensation does count towards retirement if someone is adjunct faculty to full-time, correct?
If they are meeting ASRS eligibility as adjunct faculty?
Yes.
Yes, then that counts their earning service credit, and that is compensation towards the average.
And then the other, again, has to do with the purchase years of service right before July 1. Can you purchase years of service right before July 1, 2011 to be eligible for the 80-point system?
Great question. No, unfortunately, you cannot. Even if you have started an ASRS right before that cutoff, even if you purchase years, it doesn't give you a retroactive membership date, so it doesn't allow you to do that. Even if you, let's say you had been participating in ASRS and then you left and you took your money out, took a refund, so you're no longer a member. Then you come back to employment and you decide you want to reinstate your service credit to pay back your refunded contributions plus some interest. Now you have all of that service credit back, but it does not reinstate your old membership date. Okay. Well, thank you everybody for being here and being online. Sorry.